What if everything you've been led to believe about a financial event was a deliberate, carefully constructed lie, not by some shadowy conspiracy, but by the very market forces that profit from your confusion? The announcement from the Central Bank of Iraq was crystal clear and should have been a moment of definitive closure. No depreciation for the IQD. For now. But in the shadowy, echo chamber world of dinar speculation, a clear denial from the highest monetary authority isn't the end of the story, it's merely the opening gambit in a much more complex and psychologically fraught game of financial chess. Let's pull back the curtain completely. This wasn't just a routine press release to calm jittery nerves. This was a strategic defensive move against a tidal wave of misinformation that has very real and very damaging consequences on the ground in Iraq. To understand why this statement is so critical, you must first understand what the central bank is truly fighting against. It's not just fighting economic pressure from a high dollar exchange rate on the parallel market. It is in a direct war for narrative control against a powerful and wealthy ecosystem that thrives on ambiguity and hope. The parallel market rate, that number you see flashing on screen trackers that is significantly higher than the official rate, isn't just a simple reflection of supply and demand. It is a pressure gauge, a thermometer measuring the fever of public sentiment, and it's being manipulated by large-scale money changers and speculators who create artificial scarcity of the US dollar, thereby driving its street value up and creating the very panic the central bank is now trying to quell. This creates a self-fulfilling prophecy. The wider the gap between the official and parallel rate, the louder the whispers of an impending, forced devaluation become, which in turn causes more people to rush to buy dollars, which further widens the gap. It's a vicious, profitable cycle for those positioned to exploit it. The central bank's denial is an attempt to break that cycle, to inject a dose of cold, hard reality into a market overheating with speculation. But here is the uncomfortable truth that many dinar investment gurus will never tell you. The primary mandate of the Central Bank of Iraq, right now, is not to engineer a miraculous revaluation that would make foreign speculators unimaginably wealthy. Its mandate is stability. It's to ensure the Iraqi government can continue to pay its bills, which are denominated in Iraqi Dinar. A sudden, massive upward revaluation would shatter the national budget, making government salaries and services impossibly expensive overnight. The economic chaos would be unprecedented. So, when you hear this denial, for now, you should not be thinking, "Oh, so it's coming later." You should be interpreting it as a statement of sober, long-term monetary policy. The focus is on defending the current official rate, not on plotting its dramatic future increase. The real battle is not in the halls of parliament in Baghdad. It's in the daily lives of ordinary Iraqis who see the price of goods creeping up as the dinar's purchasing power on the street erodes. This is the human cost of this speculative frenzy that often gets lost in the excitement of tracking exchange rates from thousands of miles away. The central bank is walking a tightrope, and this public statement is its balancing pole. It needs to maintain the confidence of international financial institutions while also stabilizing the domestic economy for its own citizens, a task complicated by the fact that a global audience of hopeful investors is hanging on its every word, often misinterpreting pragmatic stability measures as secret signals of an imminent financial revolution. The denial is, therefore, a tool. It is a shield against the speculative attacks that seek to profit from a perception of weakness. It is a message to the Iraqi public: we are in control. And it is a message to the world: do not mistake our necessary firefighting for a signal of a coming explosion. But the question now becomes, is this shield strong enough? Can a statement alone hold back the tidal forces of the market and the relentless engine of online speculation? To answer that, we need to look at what the central bank is actually doing behind the scenes, the tangible moves beyond the words that reveal its true strategy and the immense challenges it still faces. So, if words alone are a fragile shield against the storm of speculation, what tangible, concrete weapons does the Central Bank of Iraq have in its arsenal to defend the dinar's official value? The answer lies not in grand pronouncements about future value, but in the complex, often dry, and brutally pragmatic mechanics of international finance and internal policy, a world far removed from the glamorous promise of overnight riches. The first and most critical line of defense is the central bank's foreign currency reserves. Think of these reserves as a massive war chest, a stockpile of other currencies, primarily US dollars, that the bank can use to intervene directly in the market. When the demand for dollars on the parallel market spikes and the dinar's street value weakens, the bank can, and does, conduct what are known as dollar auctions. It floods the market with its own supply of US dollars, selling them to local banks and currency exchanges in exchange for dinar. This increased supply of dollars meets the high demand, theoretically bringing the parallel rate closer to the official one. It's a direct application of economic force, a demonstration that the bank has the financial firepower to back up its words. But this tool is double-edged. Every dollar sold from the reserves is one less dollar in the national savings account, depleting a finite resource that is also needed for critical imports like medicine, wheat, and machinery. This is why the "for now" in their statement carries so much weight. It's an admission that their ability to defend the currency is contingent on the depth of their reserves and the persistence of the pressure. The second, and perhaps more significant, weapon is a geopolitical one: compliance with the international banking system, specifically the US Federal Reserve. The majority of Iraq's oil revenue, its financial lifeblood, is held in an account at the Federal Reserve Bank of New York. To access these dollars for its auctions and for government imports, Iraq must play by a strict set of international rules designed to prevent money laundering and the illicit flow of cash to rogue actors. For years, a significant portion of US dollars physically shipped to Iraq ended up in Iran and Syria, bypassing sanctions and destabilizing the region. This led to increased scrutiny and de-risking by international banks, making it harder for Iraqi banks to conduct legitimate dollar transactions. The recent tightening of these controls is a primary reason why the parallel market gap exploded. The legitimate supply of dollars was choked off, forcing demand into the unregulated shadow market. Therefore, the central bank's real battle is to convince international regulators that its financial sector is transparent and compliant. This involves a monumental effort of auditing local banks, tracking dollar shipments with sophisticated electronic tags, and cracking down on money laundering networks. Every step towards compliance is a step towards reopening the legitimate taps of dollar supply, which is the most sustainable way to narrow the parallel market gap. This is the unglamorous, grueling work of currency stability that never makes for exciting YouTube videos. It's about banking audits and financial regulations, not secret meetings about revaluation. The third front in this war is internal and deeply political. The Iraqi government budget is overwhelmingly dependent on oil revenue, which is priced in dollars. The government then sells these dollars to the central bank for dinars to pay its vast public sector workforce. This mechanism is the very heart of the dinar's circulatory system. Any disruption, any political squabble that delays the formation of a government or the passing of a budget directly impacts the availability of dollars and shakes confidence in the currency. The central bank's statement is, therefore, also a plea for political stability, an acknowledgement that its monetary tools are only as effective as the political framework they operate within. So, when you see that official denial of depreciation, you are seeing the tip of a colossal iceberg. Beneath the surface lies a multi-front engagement, a financial fight to conserve reserves, a diplomatic fight to regain international trust, and a political fight for a functional government. The bank is not just staring at exchange rate charts. It is engaged in a high-stakes struggle for Iraq's very economic sovereignty. And this struggle directly informs the final, and for many of you, the most pressing question: what does all this mean for the tantalizing, long-held dream of a revaluation? This brings us to the multi-trillion dinar question, the silent hope echoing in the background of every discussion about the Iraqi currency, the revaluation. If the central bank is fighting so hard to prevent a depreciation and is deploying such immense resources to stabilize the current rate, what does this tell us about the possibility of the opposite scenario? A dramatic, upward revaluation that would catapult the dinar's value? The answer, when viewed through the cold, hard lens of economic reality and the stated priorities of Iraq's monetary authorities, is a sobering one that requires a fundamental shift in perspective. The entire narrative of an imminent, windfall revaluation is not just unlikely. It is fundamentally at odds with the central mission of the Central Bank of Iraq as it exists today. Think about it logically. An institution that is currently burning through its foreign reserves to defend the currency's existing value, that is navigating a labyrinth of international compliance just to ensure a steady flow of dollars, and that is begging for political stability to maintain a basic economic system, is not an institution that is secretly planning a monetary event that would throw every single one of those delicate systems into catastrophic disarray. A massive revaluation would be an economic earthquake. It would instantly make the entire Iraqi government budget, which is calculated based on the current exchange rate, insufficient to cover its costs. The state would be bankrupt overnight, unable to pay the salaries of its millions of employees. The cost of Iraqi oil on the global market would skyrocket in dinar terms, potentially making it less competitive. And for everyday Iraqis, while imports would become cheaper, their entire domestic economy, from the price of a loaf of bread to the cost of rent, would be thrown into a deflationary spiral that could cripple local businesses. The central bank's primary goal, its raison d'etre, is to prevent exactly this kind of volatility. It seeks a stable, predictable, and slowly strengthening currency, not a financial firework display. The "for now" in their statement should be the biggest clue of all. It signals a managed, gradualist approach. The most realistic and optimistic scenario for the Iraqi dinar is not a sudden jump, but a long, slow, and deliberate process of closing the gap between the official and parallel rates through the very mechanisms we just discussed. Increased dollar supply from compliance, a stronger and more diversified economy, and sustained political stability. The true revaluation will be the slow and unglamorous erosion of the parallel market premium until the two rates converge, effectively strengthening the dinar's real-world purchasing power for Iraqis in a sustainable way. This is the genuine success story, the one that benefits the people of Iraq rather than foreign speculators. It's a story that unfolds over years, not minutes, and it doesn't make for thrilling Telegram alerts or premium subscription newsletters. The dream of a life-changing revaluation is a powerful one, but it is a dream that exists entirely outside the operational framework of the Central Bank of Iraq. It is a narrative sustained by a cottage industry that profits from hope, that reframes every piece of negative news as a secret positive, and that interprets every denial of depreciation as a coded confirmation of an upcoming revaluation. This is the psychological trap. The central bank speaks the language of stability and risk management. The speculation community hears the language of hidden codes and imminent breakthroughs. They are having two entirely different conversations. So, where does this leave you, the observer? It leaves you with a choice. You can choose to listen to the official statements and analyze the tangible actions of the monetary authorities, or you can get swept up in the endless cycle of rumors and reinterpretations. The central bank has drawn a very clear line in the sand. Their focus is on defending the present, not on triggering a speculative future. The path to a stronger Iraqi dinar is a path of economic reform, international integration, and political compromise. It is a difficult, unsexy path, but it is the only real one. The promise of a shortcut, of a secret button about to be pressed, is a siren song leading away from this reality. The story of the Iraqi dinar is not a thriller novel. It is a complex economic case study in nation building. And understanding that distinction is the most valuable piece of information you can possess. If this deep dive into the real forces shaping the Iraqi dinar has clarified the noise for you, if it has given you a more grounded framework for understanding these developments, then do me a huge favor. Share this video with one other person who needs to hear this perspective. The biggest weapon against misinformation is shared knowledge. And make sure you are subscribed with notifications on, because we break down complex economic stories like this one, cutting through the hype to give you the clear, factual context you need to understand how the world really works. This isn't about telling you what to think, it's about giving you the tools to see through the noise for yourself.